I'm Tammy Cranage, certified mortgage advisor. Welcome to my YouTube channel. So today I want to talk to you guys about a conventional loan versus an FHA loan. Going into this crazy market that we're headed in for, it's important to know the difference. And if you're a listing agent or someone's put an offer in on your house who is getting an FHA mortgage, you want to understand the pros and cons to an FHA mortgage. So let's get to it. Before we do, real quick, if you're new to my channel, please be sure to subscribe so that you're sure to get all the up-to-date information. All right, now 4 things about an FHA loan that make it a great loan. So first of all, FHA is a government-backed loan. It's backed by HUD, Housing Urban Development. And the biggest advantage is that it allows for the lowest down payment. 3.5% is a down payment that it allows for. And you don't have to be a first-time home buyer to get this low down payment option. The second advantage is it is not credit score driven. FHA allows credit scores to go down as low as 580 in some cases. So it is a little more forgiving when it comes to credit score. Also, it is more forgiving when it comes to when life happens. So if you've had a bankruptcy, a Chapter 7 bankruptcy, or a short sale, a foreclosure, FHA is going to allow you to get back into homeownership after a short period of time. A Chapter 7 is 2 years you have to wait, and a foreclosure and a short sale is only 3 years, as opposed to conventional, where in most cases you're waiting 7 years. The other option, a big option, is that it allows you more buying power. FHA tends to be more forgiving when it comes to outstanding consumer debt. So it allows you more buying power and allows you to maximize how much of a home you can qualify for. In some cases, if there's money that you can't use, if you've been at your job for less than 2 years and you can't use your commission or overtime, FHA allows you to maximize your buying power and not limit what you can buy because we can't use those forms of income. Now, there, of course, like everything, there are some cons to the situation as well. So FHA does have some cons, the big one being mortgage insurance. So FHA gives you a low interest rate, but they also charge you an upfront mortgage insurance premium. So no matter how much you're putting down, you will be required to pay a percentage financed into the loan amount. So at this time of this recording, it's your your purchase price minus your down payment plus your upfront mortgage insurance premium that is financed into the loan. Now, if you're putting down less than 10%, so most times it's 3.5% to 5%. So if you're putting down less than 10%, you're going to be required to have monthly mortgage insurance for the entire duration of the loan. So if you end up being in this loan for 30 years, you'll have mortgage insurance for the entire 30 years. Now, there's always situations where you'll be able to refinance out of it, but it is something to know that at worst case, you could be in this loan, you're going to have mortgage insurance no matter what no matter how much equity you have in the house, you'll be required to pay the mortgage insurance. Another con to it is this product is only for primary homeowners. So if you're an investor, an FHA loan is not an option. If you're buying a multifamily house and you plan on living in it for a short period of time and turning it into an investment property, you definitely want to talk to your lender about that because it might not be a good option for you long-term because of the mortgage insurance. So it is only available for a primary homeowner. Another thing to consider, you can only have one FHA loan at a time in some circumstances. If it's a smaller house or if you're moving 100 miles away, FHA will allow you to have 2 FHA mortgages. But in most cases, you can only have one at a time. So if you're buying a house now, a 2-family house with FHA, and you plan on buying a single-family house in a short period of time, you're not going to be able to have 2 FHA loans at the same time. So you want to definitely talk to your lender about that before you make that decision. Another con are FHA loan limits. So in most cases, just because you can qualify for a certain amount doesn't mean you'll be able to. FHA has certain loan limits. For example, where I am in Fairfield County has a 601-450 loan limit, but the next county over in New Haven, it is a 57 loan limit, 331, maybe 331. They just changed it. So the loan limits are very different. So even though you can qualify for a bigger mortgage, you can only go as high as the FHA loan limit will allow you to. Another con to consider is if you're buying a condo, it must be on the FHA approved condo list. In most parts of my area in Connecticut, there are very few condos that are on the FHA approved condo list. So if you are planning on getting an FHA loan, you have to make sure you check that FHA condo list before you fall in love with the condo. Now, there are some misconceptions that I'll take and clear up as well. First misconception is that FHA loans are harder to close and take longer. That is just not true. FHA loans take just as long, 30 to 45 days. So there is no reason why an FHA loan should take longer. Misconception number 2 is appraisals are more strict. Appraisers are basically looking for health and safety of a house. So a big one that comes up is peeling paint. If the house has peeling paint and the house was built prior to 1978, it's because of a safety issue. Lead paint can be a problem. So if there's peeling paint or the railings are unstable, those are things that will need to be addressed before you can close on an FHA loan. They are not a deal breaker, but it is something to consider. So there's no reason why you shouldn't, as a listing agent or as someone selling a home, there's no reason why you shouldn't consider a buyer making an offer with an FHA loan. They are a great loan. They are backed by HUD, and they allow people to enter this journey of homeownership as well. So hopefully that gives you some more information. If you need to get pre-approved or need to update your pre-approval going into this next market, please be sure to reach out to me. Thank you so much for watching, and I'll see you again soon. Bye for now.